Hi, thank you for listening in. I'd like to introduce you to one of the mortgage brokers that I've worked with since the beginning of my career in conveyancing. His name's Dale. So tell us about your business, Dale, and what you do.
Oh, first of all, thanks for having me, Rachel. So we're residential finance specialists, and we've been in business now for 10 years, cutting our teeth on first home buyers and investors, and in particular showing people how to prepare to purchase property and then how to demolish their debt in a decade.
Really? And part of that, right? So just for greater context, Dale and I know each other. I did some work with him about 5 years ago where so originally I wanted to be a mortgage broker, right? That lasted about a good 2 seconds. Not because, for any other particular reason. I just figured that numbers weren't really my thing, and I was always better with words than anyway, so I naturally gravitated towards the law and conveyancing. But anyway, I did some mentoring with Dale quite a while ago, and either way, so when I started my conveyancing franchise, we reconnected again, and we've been working together ever since. But Dale and I are also part of the same networking group, referred to as Fresh Networking. And in the start of your speech, you always refer to, when you're talking about debt detonation, you've got 4 steps, right?
Yeah.
So tell us, what are the 4 steps to the ultimate debt detonation with Dale, the debt detonator?
Yeah, so obviously the first step for anyone who's looking to purchase property is to have their finances in order. And so some people come to us needing that sort of assistance to get their finances ready and to understand borrowing capacity and what they need to show the banks. And some people come right at the second stage, really, which is actually the home loan acquisition. And then from the home loan acquisition, once you've got that, it's all about creating the equity. And so we show people how to get rid of their debt as quickly as possible. And then leverage that equity if that's in line with their strategy so that they can have choices in life ultimately at the end of the day.
Yep. And I guess really, for anyone leading to retirement, I mean, as you've told me before, what's the average savings that Australians retire on really that haven't had that ability to detonate their debt?
Yeah, so there's a staggering stat really, which not so much in terms of savings, but when people retire, a staggering percentage, I think greater than 90% of people retire earning less than 60 grand a year.
Wow.
And that often involves, relying on the government pension, and in a lot of cases as well, using their superannuation to pay out their remaining mortgage. And we just sort of feel that hard-working Australians deserve better than that.
Absolutely.
And so we're trying to be part of the solution to that issue.
Absolutely. Now, I think for those that want to get in early, although, really, people in the 20s and the 30s, they don't necessarily think about their retirement, but if we could give some wisdom to those that are thinking about actually preparing for the future long term, to do the right things by themselves, their future families, their existing family as well, what we're really here to do today is to, really not dumb down, but take down all of the myths behind finance. And, I think a common theme for a lot of young Australians is that they believe that it's impossible to get into the property market. But what we're going to do today is just for education purposes, break down what the buying process is, the steps that you can take early on to get into the market, so then you're not going to retire on earning $60,000 a year, because nobody can live on that these days. And we're going to take you through that process. So just first things first, so then people that are viewing in can understand, obviously there's 2 ways in which you can, get a pre-approval. Either you go direct to the bank or you go to a mortgage broker. So just for people listening in, can you just differentiate the difference between actually going directly to the bank to the benefits seeing a mortgage broker?
Yeah, I guess there are a number of benefits in seeing a broker as opposed to going directly to the bank. If you go directly to the bank, they can only offer you their products. And so we often have clients coming to us that have been into the bank and the bank said no for whatever reason, or perhaps their borrowing capacity with that particular bank is capped at a certain point. And the mortgage broker provides choice. So we've got around about 50 different lenders on our panel, and all of them have different appetites for lending. So quite often what one bank will give you might be significantly less than what another might, using the exact same information that you've got. So the mortgage broker provides the client with choice. They provide them with a personalised service.
Yep.
and just in general property advice that people don't get when they just go in to see their usual bank.
Definitely, and like you said, as opposed to just being restricted to, 3 of the products that might be available to you. Seeing a broker that got a panel of 51 banks, generally speaking, plus or more, and you're opening yourself to thousands of products. So it's a real no-brainer as to why you wouldn't see a good mortgage broker when you're thinking about the process of starting, purchasing a property.
Yeah, and just if I can add on to that, Rachel, legislation was passed a few years ago now called best interest duty. So the mortgage broker has to be able to articulate why the recommended lender or product or interest rate is in the best interests of the client. And it's something that the banks actually can't do because they're only offering their particular product. The mortgage broker is obligated to not just act in the best interest of the client, but also to be able to articulate that. And that forms part of our credit proposal that we send out to each and every client prior to submitting an application to whichever lender is our recommendation.
So I didn't even know that myself. And really, you're not only just opening your, the doors to having multiple products and, really a better interest rate, but actually it's even a more ethical option. And I guess in the past, there was a real stigma behind seeing a mortgage broker. It's a bad idea, it's a dodgy. All mortgage brokers think about their commission, but I guess with the introduction of best interest duties, it's now they're forced to give you ethical options. So a real no-brainer, really. Why wouldn't you go see a broker over going direct to the bank, really?
And I think the evidence suggests that people are far more open than what they were. I mean, when I started my career 10 years ago, the broker share in the market was around about 42%, and that figure now sits at 70%. Wow. So 7 out of 10 people prefer to see a mortgage broker for the reasons that I've already outlined. Yeah,
a real shift there. Now, I guess so when we're really going to the start of when you're looking at purchasing a property, one of the things, so unless if you can just buy a property in pure cash, right? We all dream that, but unfortunately, suckers like me, I have to go and get a loan to buy a property. So really when you start thinking about buying a property, and if you're in a position where you need to get a loan, I think it's really wise for someone before going and, starting the process of making offers on property to go get a pre-approval. So Del, can you just tell me what a pre-approval is?
Yeah, well, in its most simple terms, a pre-approval is essentially peace of mind that a lending institution has ticked off your finances and said, yes, in principle, we're happy to lend this amount of money to finance the next purchase that you've got. So there are always conditions surrounding pre-approvals. You still have to find a suitable security. You still have to ensure that there's no changes in most cases in your financial position between gaining the pre-approval and finding a property. But I think for a lot of people, just that peace of mind, they know the finance is good to go, helps them go out and buy property with confidence.
And I've had, I guess, a bit of a stigma behind pre-approvals is that some people just say that they're a fallacy, they don't really mean anything, but from what you've just told us, provides an extra layer, not necessarily a guarantee, but at least an indication of serviceability when looking at getting a loan from a bank. So, like I said, first go get a pre-approval from a good mortgage broker, and then let's start talking about the buying process from there. So obviously, part of when you're looking at buying a property, things you really have to consider are, the type of property that you're interested in. Obviously, apartments, units, townhouses, houses, right? Also narrow down by area too, and I guess, like us in the process with conveyancer and a mortgage broker, it's also good as well just to, even get the opinion of, it could be a buyer's advocate or a vendor's advocate, because really I think a common problem with the perception that getting into the market is not viable in Australia is that we just need to bring you back to, unfortunately, what is reality and really what is, what you're actually capable of buying. So do your research and, moving on from that, once you get an idea and you narrow down the areas that you're interested in, then it's a good stage where you start finding properties that you're interested in to, set up that appointment with the mortgage broker, get a pre-approval put into place, but also as well partner up with the conveyancer. Because when looking at these properties, obviously, what you see might look good, but on paper that might be a different story. And the whole role of a conveyancer into the property buying process is to have a look at these contracts and to provide general advice around suitable conditions when making an offer on a property. Now, because the topic is finance here, I want to talk about, so if you're getting a loan for a property, you've seen a mortgage broker, you've got a pre-approval, making an offer subject to finance. Now, basically, you can tell us as well, unless if you want me to explain it. Can you just explain to me, if I was a first-time buyer, what making an offer subject to finance means for you and what it means from a legal perspective?
Yeah, well, I'll let you cover off the legal stuff.
Sure.
But from a finance perspective, subject to finance gives you the opportunity when you're purchasing via private treaty or private sale, as most people refer to it as. It gives you the chance, or gives you the chance to organise your finance and have the bank review the security that you've had your offer accepted on. And there's normally a window, typically 7 to 14 days in the current market, where once you've had your offer accepted and you've exchanged contracts, you've got that period of time to actually have the bank tick off on the security and issue a formal approval for the finance.
Yep. And I'll just touch on that from, I guess, as you said, the legal perspective in it. So basically, like Dal has explained, right, so when making an offer subject to finance, what you need to do is that you need to specify how many business days that the, for the time in which the finance to come through. So for a mortgage broker, I always recommend, have between 7, even up to 14 business days, depending on where you're at with your finance application. And basically, the whole purpose of what that condition does is that if for whatever reason in that time, if your finance is rejected by the bank, you don't receive that formal approval, you can terminate the contract under that clause. So really important, I'll just say again, if you're seeking finance and getting a loan for a property, make an offer subject to finance, okay? Now that we've moved on in the process, so once we're in this contract, we've got to the stage where we've got formal approval from there, leading up to settlement, because this is a common question that I get from clients of mine. Okay, so now I've got informal approval, right? Leading up to settlement, is there anything else I need to do with the bank in order to, settle into the property? And I'll lead you into it, insurance, right? So one of the things that you need to do, right, once you've got formal finance approval leading up to settlement, you need to take out home and contents insurance. The purpose of that is that the bank has a registered interest in your property, so they want to ensure that their interest is insured once that's lodged with that property. So is there anything else that people need to do other than that?
Yeah, there's a few things. So you mentioned home and contents insurance. The other thing is building insurance. Unless you're buying in a strata titled property, which is usually like an apartment or something that might be governed by body corporate, you will need to take out building insurance. And sometimes the lender will specify the amount that the building needs to be insured for. But in terms of other things, so we've got formal approval, you've signed your letter of offer and your loan contracts with the bank. I guess the only other thing really from here, from our side of things, is making sure that you've got your bank accounts with your new lender set up in time. And importantly, that you've moved any contribution that you're making to the purchase into those new accounts so that settlement can actually go through smoothly. The last thing we want is having to make emergency dashes to the bank in order to get settlement to take place. So we sort of make sure in our process that all your funds are sort of moved across well in time. Obviously, between bank to bank, sometimes that can take a couple of days, and particularly if there's large sums of money being moved between banks. So yeah, that's probably the only other thing, apart from organising your insurance, is having all your bank accounts set up, or at least your surplus or shortfall account, as we refer to it as, set up, ready to go well in time for settlement.
Great. And just on that as well, so basically what Dale has just described is what I refer to, and as you've referred to it anyway, it's referred to as a nominated shortfall account. Basically, it's an account that you nominate. And from a conveyancing perspective, right, as to how it works is that, so we use a legal platform called PEXA. Basically, PEXA is the middleman between the banks, us lawyers, the parties that need to be paid when buying a property. And with that nominated shortfall account, right, so it's basically giving authority to the bank to access that bank account. And Dale's talked about moving funds into that account that might be required for settlement, right, outside of the loan amount, your own contributions. And with that authority, the bank has access to that account. they're able to actually deduct the funds required to settle, so then we're all balanced for the settlement to go through. Having that done, as opposed to using a trust account, which is becoming an increasingly rare thing for independent sole conveyancers to have because they're a nightmare to manage. So instead of going via that old traditional route, setting up that nominated shortfall account just ensures that we settle on time, it's all smooth sailing, and like you said, we don't have those last minute runs to the bank, which are always incredibly stressful and nightmarish to manage from both of our ends.
And of course, it means that you don't have to dash into the city with your checkbook and hand over checks and titles at settlement. Of course, PEXA is a fully digital and electronic method of settlement, but it's not available in every state, is it?
No, it's not. So, like in Tasmania, it's still all paper-based, really. But if you're here buying in Victoria and really the rest of the country, we use PEXA. So, like you said, it's the new digital age of buying property, and just with those general pieces and bits of advice that we've given you, will just ensure that we settle on time, it's all smooth sailing, and you're protecting yourself along the way when purchasing a property. I'll just reiterate again, getting to pre-approval, seeing a mortgage broker, making an offer subject to finance with a reasonable amount of time for the finance approval to come through, and doing those last extra few things and following through with what your mortgage broker tells you to do. Same with the bank, to ensure that we're all ready and set to go for settlement. Now, we've talked a lot about, obviously, common terms, pre-approvals, the overall buying process from a conveyancer, mortgage broker perspective. There's so much more to add on to that. But going back to with the trend of today, which is, well, I've been looking forever, I'm stuck in the muck, I'm not even going to bother trying to buy a property in Australia because it's just not achievable. Well, it is. From a broker's perspective, is there any sort of advice or tips, anything that you give to your clients that have that strong belief that they can't get into the market? Is there anything that they could try to do to achieve really what is the Australian dream?
Yeah, it's a really good thing, and particularly in Melbourne and Sydney, some of the bigger capitals, even Brisbane, people can't afford to buy in an area that they would like to live in a lot of cases now. So what we're seeing a lot of clients do is rent vest, which is essentially where you continue to rent, but you still enter the property market in a market that's perhaps more affordable. And that way you can achieve the best of both worlds. You still get the growth on the property, but you're able to continue living in an area that you'd like to live in. And so we're seeing increasingly more people being open to this option, recognising that getting into the market somewhere is better than not getting in at all. I think we all know, and history says, that property never gets any cheaper.
Yep.
I think there's been about 4 or 5 dips in the property market in the last 30 years. But otherwise, it's always continued on an upward trajectory. And I think the annual average growth rate across Australia is nearly 7%, just under 7% growth. So if you can't afford to buy in an area that you'd like to live in, a lot more people are considering buying in different markets where they can still realise the capital growth, I guess, in a property that they've purchased. They'll obviously have tenants that are going some way towards paying that mortgage as well, and they continue to be able to rent in an area that they would like to and are comfortable living in.
Oh, that's great, and that's really good advice. And I guess it's just one of the many ways of trying to get into the market, but it's really, that way I won't have to compromise on where I need to live. I don't have that belief hanging over my head that I'm not going to be able to own a property. There's just different ways of owning properties these days, and I think it's quite a sensible recommendation, to consider things like rent vesting, living at home with mum and dad while still owning a property. You still have that ability to do so. But really, not to be mundane, but, really just realigning with what the reality is, and just being in check with that, really, and just working with the things that we've got to do, to still have that dream in some sort of way. And, the reality is your first home isn't your forever home. Really, very rare that you find that. I think the average person lives in a property for 7 years. I think it's around that sort of time frame. So really, just, take that on board and consider it. And, either way, unless if there was anything else you wanted to talk about.
I think, for any first home buyer that's perhaps listening to this, we're sold the great Australian dream, as you've touched on, Rachel, and that is to own your own home. And one thing that I notice a lot of first home buyers doing is they haven't really given any thought to what the bigger picture looks like. So for people who have bought their first home and planning to convert it into an investment property, it's something that you really need to put some thought into what the big and longer term strategy is, because it's not always the best idea to turn an asset that is capital gains tax free into an asset that is subject to capital gains tax. Now, as a mortgage broker, I'm not qualified to give tax advice, but I think it highlights the fact that people entering into such a big transaction really need to have a team of people, obviously from the conveyancing side to help you settle the property, but a good accountant or a financial planner to really help you get your strategy right from a tax perspective, and a wealth creation perspective is really important as well.
Definitely.
Yeah, so we've touched on private sales and making an offer subject to finance. I think one of the things that we haven't touched on at this stage yet is auctions.
Yep.
And I guess there's a fundamental difference, and that being that you don't have the option to go subject to finance when you buy at auction. And I think this is particularly where a conveyancer can really earn their keep as well, because yes, conveyancers are involved in the settlement process, but you also get involved, don't you, Rachel, at the pre-offer stage. And conveyancers have the ability to cut through all the legal jargon in a contract and sort of identify any potential risks or red flags in a property. And I just wondered whether you wanted to expand a little bit on that part of your service as well.
Yeah, absolutely. So like Dale has mentioned, so huge difference between so buying a property via being sold privately to buying a property via auction, right? So really important that you get a contract review before purchasing a property at auction, because just to explain, once you purchase a property, it could be 3 days before, 3 days after an auction's held. Even if the auction's passed in, it's still actually referred to as an unconditional offer that you've made. And once it's accepted, you're bound by that contract. There's no way, there's no cooling off period, so you can't terminate it. So really important, and from my perspective, for people going to purchase, making offers at auction, get, like I've mentioned before, get a pre-approval done so you have that indication in terms of what your budget is at the auction for you to work on. And as well, get a thorough contract review done. And I think that if there's one thing I'd like to touch on, which was a mutual client of ours, he had me do a contract review for him, right? And he was looking at purchasing a property via auction. And in that contract, and this was before it was actually legalised, very recently they've amended the Sale of Land Act, because what they're trying to do is to make the buying process more transparent, right? And in this contract, which was, I did a contract review in December before that legislation was coincidentally passed not so long afterwards, was in this contract it was riddled with debt, right? And basically this contract was structured where an unbeknown, a buyer that wouldn't know any better really, would sign up to this contract and take on the debt of the vendor. Now, when I had a look at this contract, and it was a very, that condition immediately stuck out to me, right, because it's an unfair one. If you actually had a look through the certificates and had a look at the financial overlay of the property, they actually owed more than $50,000 to the State Revenue Office of land tax and other debts as well. And it was riddled with other problems too. They owed a lot of money to council, they owed a lot of money to water because they weren't paying their rates. But this unfair contract was designed that a purchaser, if they bought this property, they'd take on this debt, right? And just imagine that if you were told from a mortgage broker's, so via a pre-approval, right, you could only borrow at max $900,000 plus your other taxes like stamp duty, everything else, right, as part of the process. Imagine being slapped with another 80 grand as an example on top of that, right? But if that client didn't get a contract review done, he probably wouldn't have been able to buy it with the other debt that was attached. Other problems with this property, there were illegal structures built over easements, there were notices from council for the current vendor's non-compliance, and there was an order from council for the vendor to fix up. There was a shed, right, that was built over these drainage pipes running underneath the property. They wanted the shed torn down, but that was another problem that mutual client of ours could have taken on if he didn't have a contract review done. So, although a very extreme, dramatic example, but the real life examples that I say day in and day out, and sometimes I'll get a call from a client that's already purchased a property via auction, they're bound by this contract and they want to get out because they've signed up to a condition like that. So, although extreme, like I said, get a pre-approval done, get a contract review done, because really, if you're going to go for an auction, you want to be well versed into terms of what you're actually signing up to, because it's too late once you're in it. So that is, exactly what I've mentioned with Dale and discussed before. We've talked about the importance of touching base with a broker, touching base with a conveyancer early on in the process to ensure you make an educated decision when buying a property, but a good decision too. I want to thank you so much for coming on, and definitely we'll share your details as well once we publish these videos and the podcast. It's Dale at The Finance Architect. Your office is based in Oakley. Check out his website. He's a great broker and I'll vouch for that too. And thanks so much for your time.
Thank you very much for having me. I've had a lot of fun, and we're here to help at the end of the day. So if you've got any questions, please feel free to reach out at any stage.